What is going on, investors? Hopefully you guys are doing well out there. It is time to talk about Palantir Technologies, ticker symbol PLTR. The company just came out with their Q3 earnings. We'll talk about that. They also gave us guidance for Q4 and updated the full year 2021 revenues and profits that this company is expected to make. We'll jump into the financials as well. We got to talk about the income from operations, or in this case, the loss that Palantir is generating. We got to talk about stock-based compensation because quite frankly, that has kept a lid on this stock. Take a look at this stock chart over at Palantir. This stock has gone sideways for a year despite all the hype here on YouTube. I mean, you can just bring up your favorite YouTube channel. I mean, they're constantly pumping this stock, and it's literally been range bound between $21 and $27 per share. Need you bring up a chart of Google or Nvidia or AMD or even like a Facebook, and boy, you would have had a lot more money in your account. Well, now, from a technical perspective, we could be on the verge of a breakout with Palantir, and this is looking to me like it wants to go higher. So we'll talk about that from a technical perspective as well when we jump into this one. Now, we got to keep in mind too with Palantir, this one's got a $52 billion valuation, and you don't need Yahoo Finance to tell you this stock is mega overvalued. So they've got to keep delivering, and I tell you what, in the Q3, I think this company did. I don't necessarily think anybody's buying this company for profits, at least today or even next year, but we've got to have strong revenue growth, and we absolutely did that in the most recent quarter. You had 35.5% year-over-year revenue growth. It went up to this $392 million. When we get over to the financials, I'll show you this 392, how it compared to last year. We'll run through all the numbers. We'll see how we're doing from an operating perspective here in a second. Now, what I want to talk about too is this company gave us guidance for the upcoming quarter, that is Q4. Palantir is expecting about $418 million worth of revenue. That's actually well above the $401 million that was consensus before company updated their guidance. Now, they are expecting revenue growth this year to come in at 40%. Prior, the revenue growth was a little over 30%. They're expected to do about $1.5 billion versus the 1.51 that investors were expecting. But keep in mind, $1.5 billion worth of revenue for the whole year. And again, you got a $52 billion market cap. That's why this company has to keep delivering. On top of that, you got people just hyping this stock up like it's the next Tesla stock. And they are way far away from that from a revenue and certainly an operating profit perspective. Now, speaking of the operating profits, or in this case, his losses, we'll take a look at them here. The last 3 months ended. We got our most recent quarter here on the left-hand side. So we have our revenue came in at this 392. This was our mid-30% growth over last year. We're sitting at about 289 million. Now, what the street loves and what I love about this company as well is mega. I mean, we're talking mega high margins. Take a look at this cost of revenue. You only had to spend $86 million to make this 392. That gives us gross profit off of 392 million bucks. You got gross profit coming in at $305 million. Take a look at this, okay? Last year we spent $149 to make $289. So your cost of revenues went down and your revenues actually went up by 35%. Yeah, that is what the street absolutely loves. And I tell you what, you print a couple more quarters like this, and then yeah, we'll start moving up this stock chart really quick because that is absolutely fantastic margins. Now, what I also noticed in the most recent quarter is they really dialed back the stock-based compensation. We'll talk about that more here in a second. So we've got sales and marketing that ticked down mainly. Again, we'll talk about here in a second, stock-based compensation. Research and development went down big time. General administrative got cut in half as well. So our total operating expenses last year were like 3 times revenue. Okay. Our revenue last year on a quarterly basis was 289, but our total operating expense, I mean, you have to laugh when you say this, was $987 million. Okay, a lot of that was stock-based compensation. I'll show you that here in a second. They break that out for you on Palantir. Now, this quarter, much more normalized, okay? Total operating expenses coming in at $397 million. I want to remind you, though, that is still in excess of our revenue, okay? Not just our cost of revenue, just our top line revenue came in at 392. Our total operating expenses come in at 397. So you take this 397 and this $86 $86 million worth of cost and you minus off our revenue, you're still at a loss from operations. But I tell you what, this company has turned it around, and it's turned around quick, and the bull case is starting to play out to a certain degree because this company's business is starting to scale. You notice last year we lost, oh my goodness, $847 million in the quarter. In the most recent quarter, you lost about $91 million. That looks like the run rate we're basically on. You see here in the right-hand column is for 9 months. That's basically 3 quarters. This is a quarter over here on the left-hand column. So you times this number by 3 and you're getting very close to this 352. So right now, the company's on about $100 million per quarter burn rate. That is obviously way improved. I mean, we're nearly at $1 billion run rate in terms of cash burn. Now, the other thing that we're burning up is just the dilution. Take a look at this. You had about 900,000 shares. Now you got 1.9. I mean, you literally have 1 million more shares. You wonder what these employees do with their stock, okay? They're being rewarded probably with a very meager salary, but also a lot of Palantir stock. That is why you have a lid on the stock, okay? A research and developer over at Palantir, he wants to buy a new Rolex. He wants to buy a new apartment. He wants to go on vacation. He wants a new Tesla. So he's got to sell his shares. And that's what's kept a lid on this stock for literally a year. And you've lost out on a lot of gains considering the market has just been rip-roaring to the upside, especially mega cap tech and chip makers. So you've missed out a little bit, but this company does appear it's turning the corner from a stock-based compensation expense perspective. What I showed you up here, we read these like it was dollars. And for the most part, that's how I like to analyze a company, because I tell you what, the research and developer over at Palantir, whether you're paying him in Palantir shares or cash, he's going to expect a certain amount of compensation because he could then just go work for the next company or the next, startup or whatever it is. So you got to pay these people, okay? And at some point, they run out of interest in the shares of the company, and you have to start paying them in cash. So I tend to read these numbers in cash, but if you don't want to, you can come down here to stock-based compensation, and you can see out of our cost last year. So I talked about how we had total operating expenses last year at $987 million. $846 million were actually stock-based compensation. It wasn't cash. It was literally Palantir stock. So you wonder again why this stock just has not been able to go anywhere for the last year. Well, they gave away nearly $1 billion worth of the stock to employees. And guess what those employees did? Did they sell all of their shares? No. But of course they sold some, of course, to finance their lifestyle, their families, anything like that. And nobody here at the Investor Channel is blaming any of these people for selling their shares and living their life. They totally deserve that. Now, but you have to keep in mind, from an investor, you're buying these shares that they're literally giving away like candy on a Halloween night over at Palantir. Okay, you're buying these shares. So you have to keep this in mind as an investor, okay? Now, in the most recent quarter, we're starting to see this normalize a bit, okay? We had $184 million worth of stock-based compensation. We see our total operating expenses came in at $397, okay? And this also will include this $86 million up here because you see in cost of revenue, some of that is share-based compensation as well. So we have to factor in all our cost of revenues, which is well over $470 million over at Palantir. About $184 million of it was actually stock-based compensation. So it's good in one sense that it looks like the dilution is starting to lighten up a little bit, but it's also a little bit negative because this company's now going to have to come out of their pocket for these costs, okay? I talked about how we had over $470 million worth of cost. Well, now we're having to fork that over in terms of cash over and above any revenue that we generate on that top line. Again, $91 million on this loss from operation side. Certainly something that Palantir can handle from a balance sheet perspective, which we'll take a look at here. This is Palantir's balance sheet. Got plenty of cash up top, okay? This is going back from last year on the right-hand column up until the most recent quarter. You basically got a 9-month view here. Plenty of cash, okay? $2.3 billion. You got a little bit of restricted cash. You got accounts receivable over here. You got marketable securities. I mean, you got plenty of of cash over here. This company can survive for a very, very long time, even when they're losing $100 million a quarter. It's not necessarily that big of a deal because, again, part of that money is still stock-based compensation. We do have some liabilities, but nothing really here, as you'd expect. Maybe a company that's just more recently gone public. This company's only got $976 million worth of liabilities. Very, very well positioned in terms of that. Now, cash flows, the company, when they do their press releases over at Palantir, notice that they're going to put at the top of our press release, we raised our adjusted free cash flow outlook. So what they're going to do is they're going to show you these cash flows, and they're going to adjust for the fact that they paid out $611 million over the last 9 months in terms of stock-based compensation. Last year, we talked about how we were over $1 billion. Yeah, over $1 billion worth of stock-based compensation over at Palantir. So yes, when you pull down this net income number this year, for 9 months, we were sitting at that 364. I showed you that on the statement of operations. So we come down here for the last 9 months. So this is our 9-month column here. This is our most recent year. You come down, you pay taxes if you have to, you pay interest on your debt, and you come down here to a net income number of negative $364 million. Last year, you were negative $1 billion, okay? Now, what they allow you to do on cash flows is add back in stock-based compensation like it's free, okay? Because from a cash perspective, it is free for Palantir to just, it's like almost like the Federal Reserve printing money. Well, Palantir can just issue shares of Palantir stock. No big deal, right? Okay, yeah, it is a big deal if you're a shareholder in this company, okay? If you're common Joe shareholder who has to, you're trading your dollars to get Palantir stock. The employees and the executives are trading their time. Those are two completely different things, okay? And so you need to keep that in mind when you invest in a stock like this. Also, when you look at other YouTubers and certainly the company themselves, they're gonna tout these adjusted numbers. I'm not saying that you can't adjust the numbers. I just want you to understand what you're looking at. They're adding back in the stock-based compensation expense. So you take this 364 net income, guess what? You get to add back in $611 million like the employees work for free. Does that make any sense? No, it doesn't. That's why I don't typically look at adjusted numbers when we're talking about this much of stock-based compensation. Now, next year, 2 years from now, when this stock-based compensation will likely normalize a bit, it'll get down to a lower level. Can you start analyzing cash flows at Palantir? Sure, I think you absolutely can, okay? That gives us positive net cash provided by operating activities at $240 million. So if we can somehow normalize this stock-based compensation, continue to grow our net income, well, this company is printing a fair amount of money for the last 9 months on a free cash flow basis. But I want to remind you, okay, we're still at a $52 billion valuation. And out of all the hype, I know there's a ton of hype around this stock, that is still wildly overvalued from just about any metric. Even when you look at like a Tesla or even some of these high-flying stocks like Nvidia over the last few weeks, incredibly overvalued from Palantir. Now, everything else looking exactly how you'd expect this company. They don't got a lot of stuff going on here. They are exercising some stock options, so they're still diluting you from that sense over at Palantir. All things being considered, I like the direction this company is going in. I'm curious to see upcoming quarters how this stock-based compensation expense starts to normalize, and then they have to start paying their employees maybe a higher salary in order to retain them. We'll see what happens going forward with Palantir. They certainly have a book of business lined up as well that is looking good. Now, I tell you what's looking good is this stock chart's not looking bad at all, okay? We are making a low back here in the late springtime. In the early summertime, you made another low, and then more recently in the fall time, you made another low. This stock is walking its way back up to this $27 level, which we've had marked out for basically a year here on the channel. As we analyze Palantir, we would expect this stock to do one of two things when it gets to this $27 level. Now, the most obvious thing that will happen is the stock's going to get rejected and it's going to come down lower, probably potentially down here to $23 per share and even lower down here to $21 per share. Now, I like this stock down here below $22 per share because as you've seen, that has acted as a level of support for the stock. Now, it did break through briefly back here. I think that's May or so, down to $17, $18 per share, but it rallied pretty hard off that level. In fact, all the way back up to our point of resistance up here, about 27. You could even call it $28 per share on this one. Now, what we're looking for with Palantir on the upside is you need to start printing some candles up and above. I really think you need to get up above $28 per share because we've got some price action up above here. Technically, I think the consolidation pattern is down here at about $27, and I'm rounding these numbers off. You can add another, 50 cents to this. But I would say personally, for me to say, hey, that area consolidation is over, I actually think you need to get up here probably closer to $30 per share, maybe even $31 per share. That would confirm to me that the sellers have dried up between the $27 and $29 per share range, and we could go back and retest this area up here, okay? Because remember, there is massive volume back up in these areas, actually a lot more than what we've seen over the last few weeks over at Palantir. We're actually seeing a really weakening of volume on this rally. That's why I'm a little convinced that this stock will likely get rejected at the areas we're at and probably pull back because we're not seeing a lot of volume on this most recent run up. But let's just say I'm wrong. We get to put a couple candles above the $28, $29, $30 level on this one. Well, we could then retest these levels. And yeah, sky's the limit. You can pull up a chart of NVIDIA. When you break to all-time highs, look at the parabolic move you can make on these types of things. Even like a Coinbase, okay? You break above some area of consolidation and the stock can head higher. Same thing with Palantir, okay? We got to get above this $29, $30 level, then we can start retesting these levels. I would guess probably the mid 30s, even maybe as high as $40 per share is where you could potentially run if you got some momentum behind the stock. But also keep in mind, there is a boatload. I mean, we're talking about a boatload of employees and executives over at this company that are sitting on boatloads of shares. And I guarantee you, every morning they wake up and they look at what the Palantir price is doing because this is what their net worth is tied to, quite frankly, okay? It's what they're donating all their time for Palantir stock. So the minute this stock goes on a rally, yeah, you betcha these people are going to be counting what kind of boat, what kind of Rolex they can buy, what new apartment they can move into, what kind of real estate they can buy. That's exactly the thought process these people are going to be doing. And we're over a tune of 1 million more shares than we were last year, okay? So that will, in my opinion, keep a lid on the stock as well. From a technical perspective, shorter term, we are in an uptrend. I am going to be monitoring this one very closely to see if we can get above these levels. Depending on where you want to draw this line on, we're either really close or we're actually, I think, from actually breaking out above the consolidation range, I still think we're $3 or $4 more away, which doesn't sound like a lot, but on a $26 stock, that's still like 12, 13% higher than where we need to be, okay? And we will likely run into sellers as we reach these zones because, quite frankly, that's what's happened over the last year over at Palantir. That was Palantir. Traditional valuation, tremendously overvalued. From a stock-based compensation expense perspective, very much a worrisome thing if you're common Joe shareholder. But from an operating perspective, an operating margin perspective, a gross margin perspective, I love this company. I don't necessarily think you need to be super early on this one. Tie up your money for a year in a stock that's going to almost guaranteed sideways consolidate. I'd much rather be in an NVIDIA, maybe even a Coinbase. I'd love to be much more invested in stocks like Facebook. And then when Palantir really turns the corner, that's when I think you can invest in this one. You don't necessarily have to be early on these ones, these overhyped, these overvalued stocks. You can wait until they kind of grow into their valuation. I think Tesla is probably the perfect example. You could be up 1,000% on your Tesla shares just in the last few years alone. You didn't have to buy it in the early days. So that was Palantir. Hopefully you guys enjoyed this video. Back again soon with more. Good luck with your investments.